For the better part of the last century, California has been known as a land of opportunity, with tens of millions of people from around the world migrating there in the hopes of achieving the American dream. As the birthplace of Silicon Valley, California has created some of the most valuable technology companies in the world, including Apple, Google, and Facebook, just to name a few. The wealth of high-paying jobs in the technology sector has made California one of the richest places in the world. If it were its own country, it would have the sixth largest economy in the world, larger than Canada, France, and the United Kingdom. And the macro statistics look great. With a GDP per capita of $71,000, California is one of the wealthiest states in the country, and 186 billionaires call it home. Given all the opportunity, it's no surprise that the state's population has also been increasing steadily for the past few decades. But that's why it came as such a huge shock when they reported their first ever population decline in 2021, with over 250,000 people leaving the state. California is a tale of two cities. While the mega-cap tech companies are making record profits, for most people the California dream has been dead for a long time. The rate of homelessness has been skyrocketing in recent years, and reached an all-time high of 160,000 in 2020. This means that almost one-third of all homeless people in the US are in California. According to the Census Bureau, California has the highest poverty rate in the country, with 18% of residents living below the poverty line. And in 2022, the Golden State's decline is accelerating, with inflation hitting them especially hard. So what happened? How can the richest state in the country be struggling to provide even basic amenities like housing to the point where hundreds of thousands of people are fleeing? This episode was brought to you by Incogni. Whenever you do anything online, there are hundreds of companies that collect your personal data without your knowledge. Data such as your name, email address, home address, and even your social security number. They then sell this data to third parties to target advertising, adjust your credit score, and a whole host of other things. But what's really scary is that these data brokers can be hacked, and your personal data can end up in the hands of fraudsters or cybercriminals. For example, in 2020, a data broker called Lime Leads was hacked, and 49 million people had their personal data sold to all types of nefarious actors on the dark web. Imagine waking up one morning to see that your bank account has been emptied out, or someone fraudulently took out a loan in your name. This happens all the time. There are laws that allow you to remove your personal data from these brokers, but unless you're a lawyer, this is pretty much impractical for most people. Incogni handles all of this for you. Just sign up for an account and they will automatically find the data brokers that have your data and start the process of removing it. Within weeks, you can rest assured that nobody is profiting from your personal data and putting you at risk. So check out Incogni using the link below, or go to incogni.com/wallstreet. The first 100 people to use the code WALLSTREET will get 20% off. So get your personal data off the market with Incogni today. And now back to the video. To understand the downfall of California, we first have to understand its rise, which started with the founding of Intel all the way back in 1968. Intel revolutionized the semiconductor industry by making breakthroughs in random access memory, which greatly increased the performance of computers. Over the following decades, an entire ecosystem formed around Intel's success, with computer and other semiconductor companies flocking to Silicon Valley to draw from Intel's talent pool. Importantly, this ecosystem grew to include venture capital funds, which came to fund the rapidly growing technology industry. Aspiring tech entrepreneurs from all around the world moved to California, in what would become known as the Silicon Gold Rush. If you have an idea for a revolutionary new technology, California has the most venture capital funding and the most engineering expertise to make your dream a reality. This ecosystem created some of the most valuable companies in the world today, including the likes of Apple, Google, Facebook, and Tesla. Currently, there are more than 200 so-called unicorn private technology companies, with valuations in excess of $1 billion in California, the most of any state by far. The reason why these technology companies are so valuable is because they are infinitely scalable. A team of a few dozen software engineers can make an app that is used by millions of people around the world. They can grow to be very successful with comparatively very few employees. For example, Apple and Facebook each make about $400,000 of net profit per employee. For comparison, Walmart only makes about $6,000 of profit per employee, less than 2% of Facebook. Unsurprisingly, this has been a boon for the state's economy. Their GDP per capita has grown tremendously over the past 20 years, and currently sits at above $70,000, making it one of the richest states in the country. The problem is, this wealth has not been spread out evenly. By their nature, tech companies create massive income and wealth inequality. High-level tech employees and their venture capital backers earn massive salaries and live lives of unparalleled luxury. Whenever a tech company moves into a neighborhood, their engineers quickly buy up all of the real estate, which puts massive upward pressure on prices. And that brings us to California's largest problem, which is homelessness. California has the highest rate of homelessness in the country, with over 160,000 people sleeping on the streets. In fact, this number is likely a severe underestimate, as it doesn't even include people who are couch surfing or have other irregular accommodation. Homelessness plagues every society. There will always be some people who experience unfortunate life events and wind up unable to pay their rent. But the situation in California is not normal. Many of the unhoused population in California do not fit with the traditional stereotypes. Over the past decade, the median single-family home price has tripled to more than $800,000. In certain cities like San Francisco, this number rises to over $1.5 million. In addition to housing, gasoline prices in California are consistently the highest in the nation, thanks to a combination of high excise taxes and the large geographic distance from oil refineries located in the southeast of the country. Because of this, tens of thousands of people with full-time jobs are forced to live in their automobiles because the cost of housing is simply too high. The minimum wage in California is $15 an hour, which equates to about $30,000 per year for a full-time worker. In most states, this is enough to get by with at least a small apartment. But in California, the median rent is $2,500 per month, or $30,000 per year. So if you made a minimum wage, 100% of your income would go to rent, and you have no money left over for food. Of course, some apartments will be cheaper than $2,500, but if you were only to have part-time employment or you had some kids to feed, it's almost impossible to afford even the cheapest accommodation. And of the people who are fortunate enough to have a home, 70% of them spend more than 50% of their income either on rent or mortgage payments. To directly quantify the housing shortage in California, we can look at the ratio of persons per unit of housing. California has 2.8 people per unit of housing, compared to the national average of 2.4. There simply aren't enough homes to go around, which forces people to live in multi-generational households. And for people without strong family ties, they are forced to live on the streets. Given how expensive housing is, the laws of supply and demand should kick in. Construction companies should be building new homes hand over fist to take advantage of the high prices, and the new supply will bring down prices to more reasonable levels. And it's not like there's a shortage of land. California has the largest landmass of any state in the country. While it also has the largest population, the population density is not particularly high. There's no technical or economic reason that housing in California has to be so expensive. It's all caused by local politics. Most neighborhoods have strict zoning laws which prohibit the construction of multifamily apartment units. They only allow single-family homes, which take up a lot of space per household. The entire homelessness problem can be solved almost overnight at zero cost to the government and greatly increase economic growth. In 2019, the White House Council of Economic Advisors published a report about homelessness. They estimated that changing the zoning laws to allow for multifamily apartments would cause average rents to decrease by 55% in San Francisco, 41% in Los Angeles and Oxnard, and 39% in San Diego. The decrease in rents would cause the homeless population to be cut almost in half. So haven't any of these cities followed the recommendations? Decreasing rents is great for renters, but it's not great for landlords who will see their incomes and home values decrease as a result. People who bought a home 20 or 30 years ago have become extremely wealthy and do everything in their power to artificially decrease supply. One of the most powerful tools in the landlord's toolbox is the California Environmental Quality Act, which was passed in 1970 by then-Governor Ronald Reagan. This act mandates a convoluted process for approving the development of new real estate projects. In recent years, rich landlords have increasingly abused this law to block new construction. Even if there is no legitimate environmental reason to block the development, the cost of finding the landlord's well-funded lawyers is often prohibitive. For example, homeowners often sue to block new construction because they claim that the new buildings will block their views. They can file these complaints anonymously, and it can take many years and millions of dollars in legal fees to resolve the cases. Most developers give up and cancel their projects. For example, a few weeks ago, billionaire venture capitalist Mark Andreessen was exposed for blocking multifamily zoning permits in his rich neighborhood of Atherton, California, which is the single most expensive zip code in the US. This was controversial as Mark had previously written about the need to build more affordable housing. But as soon as it would negatively affect his own home value, his opinion suddenly changed. Andreessen is not an isolated incident. It appears that most rich Californians have similar ideas. The All In podcast is a YouTube channel hosted by 4 multi-millionaire venture capitalists, including Chamath Palihapitiya. After the Mark Andreessen controversy surfaced, they made a video giving their thoughts on the case. I'll play a short clip to see how other rich Californians think about this issue.
This Atherton example is sort of cherry-picked because what this is really zoning. There are these suburbs, and it's not just Atherton. I mean, you got the East Bay as well, where people live in these areas that are zoned for single-family residences as opposed to multifamily. And that determines the character of the neighborhood. Now, if you go buy a house in one of those neighborhoods with that zoning, then that's what you expect to be the case. I mean, you have to spend more money buying a house in that neighborhood because you are investing in the character of that neighborhood. So it is unfair to the residents of that neighborhood for a developer to come along and say, hey, I'm going to change the character of this place so I can make money. I'm going to take a bunch of single family lots, turn them into multifamily apartment complexes or something like that. So I can understand why the residents would be against that.
What they're basically saying is that people buy these multi-million-dollar houses on the assumption that new developments won't be approved. If you bought one of these mansions for $5 million, but then a supply of housing doubles, your property value might then decrease down to $3 million. This is an unacceptable loss and changes the nature of the neighborhood to be less exclusive. Everybody recognizes the need for new housing to be built, but they always find an excuse of why the new development should take place in somebody else's neighborhood, not theirs. The result is you can't build housing anywhere, and the housing affordability crisis is unsolvable. With no solutions on the horizon, hundreds of thousands of California residents are leaving the state. In 2021, the state recorded its first population decline in history. The exodus from California was accelerated by the pandemic and rise of remote work. People stomached the high cost of rent because they had jobs at tech companies that could pay $200,000 or $300,000 per year. Now that they can work from anywhere, they're moving to other states with a fraction of the cost of living. Companies are also leaving the state in droves to avoid high corporate and income taxes. The highest profile example is Tesla, which moved its headquarters in late 2021. Dozens of other companies have followed suit. The software company Snowflake moved its headquarters from Silicon Valley to Montana. The pool of tech talent in Montana is far smaller than California, but because most of their employees work remotely anyway, it doesn't matter. They just choose whichever state has the cheapest taxes and real estate costs. As people and companies leave, the tax base declines, forcing the government to raise tax rates to fund public services. California already has the highest income tax rates in the country, with top earners paying more than half of their income between federal and state taxes. Further tax hikes will increase the incentive for people to leave the state, causing a negative spiral of decreasing tax base and higher tax rates. California is still the largest state economy in the country, but with no solutions to the housing crisis in sight, the Golden State is clearly on the wrong track, and the recent population decline is likely to accelerate going forward. Alright guys, that wraps it up for this video. What do you think about California? 10 years from now, will it still be the center of technology innovation? Let us know in the comments section below. Also, don't forget to subscribe to our daily business and finance email newsletter at wallstreetmillennial.com/newsletter. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.